All right, welcome everyone. Happy Friday afternoon. Here's your weekend video, some things to think about as we head into next week. As mentioned in the alert room, you do have some data next week. Not much, pretty light on data, pretty light on Fed speakers, ruining any parades. You have manufacturing PMI 10 a.m., JOLTS 10 a.m. on Tuesday, Wednesday services PMI, non-manufacturing PMI, nobody really cares. Jobless claims on Thursday. And of course, market is closed on Friday. So you get a 3-day weekend, but non-farm payrolls releases on Friday when the markets are closed. So we'll see. All right. So SPX on the daily here broke out of the wedge, very much like your SPY wedge that we've been tracking for weeks and weeks now. Bullish signal on the squeeze coming out here, and stochastics CCI hot as usual. All right. And we closed above 4,100, which is bullish. And here on the SPX, you actually have a gap that we filled here at 4080s this afternoon, but you do have a gap here at 4,200. I just don't think that we're going to run straight to 4,200. I think it's a good time to start cooling off. So, like I mentioned before, I'm not saying okay, well, number one, the NASDAQ 100 has entered a bull market. That's for sure. And if we are to track April lows on the SPYs, so we do a little handy dandy tracker here. And so have we reached 20% as of right now? And the answer is not quite. Okay, so 20% off the lows would put us right back into the bull market, but we haven't hit there yet. We did earlier this year when we hit the highs in February around 418, 419, let's just say 420. And I think we do, or we clear 420. I do think we enter, technically speaking, we enter a new bull market. Remember, the statistic I gave you guys a couple of weeks ago or several weeks ago, that anytime you're after a bear market and you have a record 18 consecutive days closing above the moving average 200, all right, and which signals that it's a potential new bull market. And so here we are. We've closed actually several days or more than a week or so above that 200. But prior to that, we did elevate above the moving average 200 for more than 20 something days. I think 30 plus days, over a month above the moving average 200. The bottoming process is never easy. If you look at, I've been telling you guys to look at your COVID recovery. And so this is your COVID recovery. It's a complete V shape, right? I don't think it's going to be a complete V shape from this point out. I think there's going to be some choppiness, but you have a lot of gaps that are created from the April and March lows of 2020. And things aren't just real. Yes, in general, I think if we can clear and enter a new bull market, I do think that the market direction is going to be generally up, but it's going to be a painful process too. There's going to be dips. There's going to be whipsaws. There's going to be CPI reports. There's going to be Powell, rate hikes, banking crisis. All that stuff is still totally plausible and is still on the table. We just have to be careful what you're swinging and how much risk you're putting out there. But so far, so good. In the last week or so, we had a really good trend. And so for me, at least right now, for the moment, I'm still choosing to risk on at this time. You look at the daily volume that came in today on SPY towards the close is magnificent. Definitely exceeded the average daily volume for the last several days. So you can't really say that we're moving up without low volume. What tends to happen as bull markets emerge, the volume on the indexes starts to drift. It doesn't mean they're sellers. It just means that the price is stabilizing. There's lesser demand. Okay. But the demand starts going elsewhere in the market to other stocks and your shares and small caps, mid caps. Okay. Some of your other ETFs, money starts to shift. So here's what I'm watching for on the SPYs going into Monday or the next week is that if we can clear this pink line here, which is your daily lower trend line from the October lows, if we can clear that above 412, let's say 412 or 413, and remain and stay up here, I think you're gonna see that bull market come in or retest 420 area, potentially retest or fill the 420 gap, because there is a 420 gap on the SPYs. But to be totally honest with you guys, once we hit that 412, I am pretty sure the bears are going to contest it. Okay. So you could get something like this coming on this following week, where we bang our head against that 412 mark. And I'm pretty sure we're going to open like 410 on Monday, or probably a 409. But it's going to be like one of these situations where perhaps you get a long wick daily candle on Monday into that trend line, and then pull back. Okay, how much we pull back, I don't know, because our stochastics are pretty hot right now on the hourly as well. So you may have to see a potential 400 dip back down here before it goes something like this. Okay, it's not always going to be a logical move, but we should start, at least in April. April is a very bullish month seasonal wise in the S&P 500 index. So you could eventually see this kind of action, a slight melt up, but something's got to start coming back down to cool off the indicators, and that generally happens. So if you look at a weekly target for next week, I do think we're going to go up quite a little bit more, but I think we're going to start pulling back just a little bit, okay, to cool things off and possibly to consolidate, chop around the market. You know how that goes. All right, on the 1 hour chart here, you have the stochastics. Okay, every time the stochastics gets up here. However, this particular time, we've been hot all week long for the latter part of the week. Okay. No telling how long we're going to stay up here, but eventually the 1 hour always 100% of the time always resets. Okay. You look at this 1 hour rising wedge that's happening right now, and we're at 409.63 in the after hours. So pushing the HOD in the after hours. So you're going to run into this green pink trend line right about 412 next week, and we may chop around. All right. So if you look at the hourly chart, all right, may bang our head against the wall. All right. And then bear starts piling into the puts, and then it goes like this. Right. Okay. If there's bad news, whoops, right? NFP reports terrible, come back to 400. So there is that possibility as well. So just be aware of this particular pattern that's setting up on the 1 hour. Okay. Real quick, I'll cover Apple here. All right. Apple is just amazing. There's just no stopping Apple. Bullish engulfing candle, three white soldiers, 3 straight green days on the market for Apple, closing out nearly 165. And you look at the Apple trendline chart, this is from the all-time highs of Apple in January 2022. You have this downward trending line, right? However, it's breaking through it. Now, see what happens here. It does get tricky, right? Do we come back to test 175? Or do we pull one of these situations where we go up a little bit more and retest that trend line back at 160? So Apple, they love Apple. It is absolutely hot on the stochastic. So you could see a little bit of further action, 165, 166, and then come back to retest. Okay. So this is where I would just be more careful, playing calls. All right. But whenever we think the market can't go up any higher, it usually does. So there you have it. So that's your Apple. Let's go over to the Qs. All right. Your Q daily candle, fully engulfing, no stopping tech stocks. You have higher volume. You have ascending volume going into the tech sector. So nothing too bearish about. But once again, you have this rising wedge, and we broke out of this wedge. We killed it for a second. It did drop below the trend, but then it just came right back up and blasted. All right. So 322 is 321 is where Q is at currently. Okay. Going back to this SPYs, well, yeah, I guess that's pretty much all I have to say really about the SPYs. So I think you guys will like the new format going forward. So I'm going to be hitting the scanners over the weekend and Monday and every day forward, and we're going to be looking for low flow stocks like PALI, PALI, PACW, things like that. All right. So that way we get a mix of different styles of play. Some of you guys want to swing stuff or small cap common shares. We'll do that. We'll play the bio stocks. I know Palisade Bio do have some Q2 catalysts coming up with their clinical research or clinical phases, et cetera. So we'll do that. We'll swing, the tech stocks or the tech options, but we go long. All right. We want to reduce the volatility of everyday, very simple moves. Go long calls or long puts. All right. So I'm going to do lesser of the scalping if we're on a nice trend day, but if we're in a chop day, we could scalp some short terms. But as long as we stay relatively long term, and in days like this, we're on a 5-minute chart. If you look at this 5-minute chart today, I mean, what was there to be bearish about, right? Well, why would I be buying puts, with a beautiful 5-minute chart as this today, right? So these are days where we go long, right, or long options, long dated options, and buy the dip. It's really simple. So not every day is going to be like this in the market. Not every day is going to be easy, but certainly when those beautiful trend days come, take advantage of it, risk on, right? And when you get those chop days, just risk off and wait for the right move. So with that being said, I hope you guys enjoy the rest of your weekend, and I will see you on Monday.